Recent developments and trends in financial reporting, Part-2, Unit 1, MCOM Final 2020-21, Paper 201, Advanced Accounting, 2nd. In this lecture, we are going to discuss about triple bottom line, TBL. In previous lecture, we discussed about sustainability accounting. This chapter will cover meaning and history of triple bottom line, concept of triple bottom line, concept of triple bottom line reporting, benefits of triple bottom line reporting, implementation of triple bottom line reporting, forms of TBL reporting, users of TBL reporting, financial reporting vis-a-vis triple bottom line reporting, challenges of triple bottom line reporting framework. Meaning and history of triple bottom line. Traditionally, business leaders are concerned about their bottom line, that is, the monetary profits their business made. Today, more leaders have begun to think sustainability. It was the old time when business companies were only concerned about their profits and revenues. With the change in time, many innovation and modifications cropped up. But what's more surprising is the incredible and drastic change that occurred in our way of thinking. The triple bottom line theory expands the traditional accounting framework to include two other performance areas: the social and environmental impact of their company. These three bottom lines are often referred to as 3 Ps: people, planet, and profit. The term triple bottom line was coined by John Elkington 1949 and colleagues at Sustainability, a strategy consultancy firm, in 1994. It is part of a historical progression that included the development of the concept of sustainable development in the Brundtland Report, Our Common Future, which proposed the pursuit of financial gains be constrained by the need to maintain social and natural system at levels sufficient for the need of future generations. Now let us talk about concept of triple bottom line reporting. The concept of triple bottom line incorporates two technical terminologies: triple and bottom line. We first try to understand these two for better understanding of the concept of triple bottom line reporting. First, bottom line. In traditional accounting and common parlance, the bottom line refers to either the operating result, which is usually recorded at the very last line or bottom of the income statement. Over the last few decades, environmentalists and advocates of social justice have been challenged to introduce to a broader concept of bottom line into public consciousness by introducing full cost accounting. Triple. The triple bottom line concept requires an organization to measure and report on three dimensions, which social, environmental, and economic, or say financial performance of the organization. For example, a leather tanning firm may report a financial profit, but their output may cause adverse health effect and pollute the nearby water reserves, and the government may end up spending the taxpayer money on health care and environmental cleanup. Now, the question that arises in the mind of the proponents of full cost accounting is, how do we perform a full social cost benefit analysis? In this respect, the triple bottom line adds two more bottom lines, namely social and environmental, or say ecological concerns. Thus, the concept of triple bottom line consists of three dimensions, namely social equity, economic, and environmental factors. In other words, the triple bottom line consists of three P's: profit, people, and planet. It aims to measure the financial, social, and environmental performance of the corporation over a period of time. At its core, triple bottom line thinking lies the social and environmental impact of an organization's activities to its economic performance. Thus, it is also referred to as TBL, 3BL, People, Planet, Profit, and the three pillars. However, it is to be noted that TBL does not mean that companies are required to maximize returns across three dimensions of performance. In terms of corporate performance, it is recognized that financial performance is the primary consideration in assessing its business success. Concept of triple bottom line reporting. Triple bottom line reporting expands the traditional reporting framework to take into account social and environmental performance in addition to financial performance. The concept of triple bottom line reporting states that reporting should incorporate the social, environmental, and financial performance of an organization. TBL reporting refers to the publication of economic, environmental, and social information in an integrated manner that reflects activities and outcomes across these three dimensions of a company's performance. Triple bottom line reporting requires that organizations should reporting on three different bottom lines that are quite distinct but related from each other. They are discussed as follows. The first bottom line happens to be the bottom line of the income statement, which is the traditional method of getting operating results. The second bottom line is that of an organization people account, a measure in some shape of or form of how socially responsible an organization has been throughout its operations. And the third bottom line is that of the organization's planet account, which measures how environmentally responsible the company has been. Thus, only a company that produces a TBL reporting is taking account of the full cost involved in doing business. Now let us talk about benefits of triple bottom line reporting. The benefits emerging from triple bottom line reporting are discussed now. Enhancement of reputation and brand. Corporate reputation is a function of the way in which a company is perceived by its stakeholders. Effective communication with stakeholders on one or more of the environmental, social, and economic dimensions can play an important role in managing stakeholder perception and, in doing so, protect and enhance corporate reputation. Securing a social license to operate. A license to operate is not a piece of paper, but informal community and stakeholder support for an organization's operations. Business is increasingly recognizing the link between ongoing business success and its license to operate, especially in the resource sector. Communication with stakeholders is often critical to securing and maintaining a license to operate. Communities and stakeholders generally are likely to be more supportive of companies that communicate openly and honestly about their management and performance in relation to environmental, social, and economic factors. Attraction and retention of high caliber employees. Existing and prospective employees have expectations about corporate environment, social, and economic behavior, and include such factors in their decisions regarding working for an organization. The publication of TBL related information can play a role in positioning an employer as an employer of choice, which can enhance employee loyalty, reduce staff turnover, and increase a company's ability to attract high quality employees. Established position as a preferred supplier. Obtaining a different position in the marketplace is one way to establish the status of preferred supplier. Effective communication with stakeholders on environmental, social, and economic issues is central to obtaining a differentiated position in the marketplace. Reduced risk profile. There is an expanding body of evidence to suggest that performance in respect of social, economic, and environmental factors has the capacity to affect the views of market participants, but a company's exposures to the management of risk. TBL reporting enables a company to demonstrate its commitment to effectively managing such factors and to communicate its performance in these areas. A communication policy that addresses these issues can play an important role in the company's overall risk management strategy. Identification of potential cost saving. TBL reporting often involves the collection, collation, and analysis of data on resources and materials usage and the assessment of business processes. For example, this can enable a company to better identify opportunities for cost saving through more efficient use of resources and materials. Increased scope of innovation. The development of innovative products and services can be facilitated through the alignment of R&D activity with the expectations of shareholders and other stakeholders. The process of publishing TBL reporting provides a medium by which companies can engage with stakeholders and understand their priorities and concerns. Next, aligning stakeholders' needs with management focus. External reporting of information focuses management attention on not only the integrity of the data but also the continuous improvement of the indicator being reported. Next, creation of sound basis for stakeholders dialogue. Publication of TBL reporting provides a powerful platform for engaging in dialogue with stakeholders. Understanding stakeholder requirements and alignment of business performance with such requirements is fundamental to business success. TBL reporting demonstrates to stakeholders the company's commitment to managing all of its impacts, and in doing so establishes a sound basis for stakeholder dialogue to take place. In addition to the benefits obtained through superior relationships with key stakeholder groups, the decision to be publicly accountable for environmental and social performance is often recognized as a powerful driver of internal behavioral change. The availability of relative information on economic, environmental, and social performance that previously may not have been collected and evaluated in a readily understood manner may enable executives to identify and focus attention on specific aspects of corporate performance where improvement is required. Now we are going to discuss about implementation of triple bottom line reporting. Let us discuss about prerequisites of implementation of TBL reporting. TBL reporting would be the little relevance to the reporting company or its stakeholders if it is not aligned to the company's overall business strategy. A decision to move to full TBL reporting should not be taken lightly. It must have senior management endorsement and commitment, as it may have major resource implications, and a half hearted approach is likely to be worse than not adopting at all. Strategy for implementation. Critical issues for consideration in the development and implementation of TBL reporting may include clean definition of the role of TBL reporting in driving strategic business objectives, establishment of the resources and cost requirements, awareness of associated legal implications, and understanding the risks involved in publishing TBL information. Now, on the same time, we must talk about key challenges for implementation. The key challenges for implementation of TBL reporting framework may include awareness of relevant issues associated with TBL reporting, understanding stakeholder requirements, aligning TBL reporting with objectives and risks, and determining and measuring performance indicators. Forms of TBL reporting. A number of options ranging from the inclusion of minimal TBL related information within statutory reporting through to the publication of a full TBL report are available to companies considering TBL reporting. A company may choose to report in full or with limitations as the management and stakeholders decide. In choosing an appropriate path forward, companies are likely to take into account various factors such as the overall strategic objectives, current capacity to report, prioritization of stakeholders' requirement, and the reporting activities within the industry sector. Now, who are users of TBL reporting? All types of business entities, businesses, NGOs, non-profit organizations, and government entities all are alike and can use TBL reporting. Let us discuss individually. Businesses. The TBL and its core value of sustainability have become compelling in the business world due to accumulating anecdotal evidence of greater long term profitability. For example, reducing waste from packaging can also reduce costs and less harm to environment. Among the firms that have been examples of these approaches are General Electric, Unilever, Procter and Gamble, 3M, and many more. Non-profit organizations. Many NGOs have adopted the TBL and some have partnered with private firms to address broad sustainability issues that affect mutual stakeholders. Companies recognize that aligning with non-profit organizations makes good business sense, particularly those non-profits with goal of economic prosperity, social well-being and environmental protection. Government, state, regional and local governments are increasingly adopting the TBL and analogous sustainability assessment framework as decision making and performance monitoring tools. Financial reporting versus triple bottom line reporting. Let us take four bases to differentiate differentiate the two system of reporting. Origin. The origination of financial reporting precedes that of triple bottom line reporting, the latter being just a few decades old. Nature. It is mandatory for corporates to prepare and present their financial reports, while preparation of full TPL reports, including social and environmental dimensions, is voluntary in nature. Scope. Triple bottom line reporting is broader in scope than financial reporting, as the former includes the reporting of social and environmental performance in addition to the financial performance of an organization. Contents. The information contained within a TBL report is of a different nature to that included in a financial report. Thus, TBL reporting enables environmental and social risks that have the capacity to materially affect long term financial performance to be identified and therefore taken into consideration when preparing financial reports. Challenges of triple bottom line reporting framework. The primary challenge in TBL reporting is the calculation of TBL. The three P's under TBL reporting framework are not measured using any common unit. Profits are expressed in monetary amounts, but it is possible to measure social capital in monetary terms is difficult. What about environmental or ecological health? Finding a common unit of measurement is one challenge. Some proponents of TBL concept suggest monetizing all the dimensions of TBL, including social welfare or environmental damages. While that would have the benefit of a common monetary unit, it would be a big challenge. The challenge lies in identifying the proper method of finding the right price for lost environment and social value creation. Now, let us also think about what should be the solution to these challenges. The solution advocated by some experts of the field has been to calculate the TBL in terms of an index. In this way, it would be possible to eliminate the incompatibilities units issues, and as long as there is a universally accepted accounting method, it would allow for comparisons between entities. For example, comparing performance between companies, cities, development projects, or some other benchmark issues. An example of an index that compares a country versus the nation's performance for a variety of companies components is the Indiana Business Research Center's Innovation Index. However, there remains some subjectivity even when using an index regarding how are the index components weighted. Would each P get equal weighting? What would be the subcomponents within each P? Do they each get equal weighting? Is the people category more important than the planet? Who would take decision in these respect? Another option would do away with measuring sustainability in monetary terms or using an index. It suggests each sustainability measures would stand alone. For example, excess of wetlands would be a measure and progress would be expressed based on wetland creation, destruction, or status quo over time. The downside to this approach is the proliferation of matrices that may be pertinent to measuring sustainability. The TBL users may get metric fatigue. After having discussion on the difficulties with calculating the TBL, now our concern is again towards attention to potential matrices for inclusion in a TBL calculation. We will discuss how businesses and other entities have applied the TBL framework in coming lecture.